Imagine this. It's 3 a.m. Your room is dark except for one thing. That glowing liquidation line creeping closer and closer on your futures chart. A few hours ago, you were up 300%, already picturing what you'd buy with the money. Now your heart is pounding, your hands are sweating, and you're whispering to yourself, please, just bounce a little bit. Just a little bit. But the candle doesn't bounce. It slices straight through your entry, through your stop, through your mental stop, and finally through your liquidation price. The screen freezes for a second, then that dreaded message appears. Position closed, liquidation. Your balance? Almost gone. Weeks, months, maybe years of saving, wiped out in one overnight trade. If you've traded crypto futures long enough, you either lived this or you're dangerously close. And here's the brutal truth. In this market, the exchange, the whales, and the algorithms are all perfectly fine with you blowing up. That's how the game is built. In this video, we're going to talk about something most people only face after it's too late. How to trade crypto futures in 2025 without getting liquidated, even in a market where Bitcoin can drop 20% in a week and hack scams and fake narratives keep exploding all over the news. This is not about getting rich in one lucky trade. This is about staying alive long enough to actually build something. Let me tell you the story of one trader. We'll call him Alex. But honestly, Alex could be any of us. Alex discovered crypto the way many people did, not through a white paper, but through screenshots. Friends posting P&L on Twitter, TikTok videos shouting 100x gem, YouTube thumbnails screaming, I turned $1,000 into $120,000 with crypto futures. He'd been working a normal job, saving slowly, feeling like life was moving in slow motion while other people seemed to be fast-forwarding their way to freedom. When Bitcoin broke past six figures and everyone started talking about a new bull run, Alex finally snapped. He thought, if I don't jump in now, I'll miss this forever. He opened an account on a big exchange, skipped most of the tutorials, deposited his savings, and picked the tab that looked the most exciting, futures. At first, it was magical. A 20x long on a popular altcoin pumped right after he entered. His balance doubled. Then another trade, and another green day. He didn't really know why the trades worked, just that they did. Suddenly, everything felt obvious. Breakouts, pullbacks, buy the dip. It all looked so simple when the market only seemed to go up. His friends started calling him the crypto guy. At family dinners, he looked at everyone differently. They talked about modest salary raises. He was thinking in multiples, x2, x5, x10. He began to believe he had an edge, not because he had a tested system, but because he had been early enough to this new phase of the bull run. So Alex increased size. That's what everyone does when they're winning. He moved from 5x leverage to 20x, from 20x to 50x. He stopped trading spot completely. Why bother with slow, boring moves when you could compress an entire month of volatility into one afternoon? Then the first real pullback hit. Bitcoin dropped hard on some macro news. Altcoins bled even more. His 50x long instantly turned red. But instead of cutting the loss, Alex stared at the chart and told himself a story. It's just a shakeout. Whales are hunting stop losses. It will bounce. I'll wait. I can't lose after coming this far. The bounce never came. That position was his first liquidation. It hurt, but not enough. The market gave him a small rally after that, and he managed to win a few trades back. The pain faded. The memory of losing turned into a joke he told his friends. Yeah, I got liquidated once, but I'm smarter now. He wasn't. Over the next months, volatility increased. Headlines swung between euphoria and fear. New ETFs, new regulations, massive hacks, sudden crashes on major exchanges. Prices moved faster, wicks got longer. Each time Alex lost, he tried to win it back quickly. He started trading more pairs, chasing more moves, checking more influencers. His screen time doubled, but his clarity dropped to zero. One night, After a string of losses, he broke his own rule and went all in on a single high-leverage long, convinced that this one perfect setup would erase weeks of damage. The funding was high, open interest crowded, the chart already extended, but he didn't see any of that. He only saw the number he wanted his balance to return to. You already know how this ends. A sudden cascade move slammed the price down. Liquidations exploded across the market. Alex watched his unrealized loss climb, and something inside him froze. He couldn't click the close button. He kept zooming out the chart, looking for any reason to have hope. Minutes later, his position was forced closed. Silence. He sat there, staring at a tiny number where his balance used to be. Months of grinding, overtime, savings, gone in one aggressive night. The charts were still moving, Twitter was still screaming, the market was still alive, but Alex felt like something had died. For days, he avoided opening the app. When friends asked about crypto, he changed the subject. He felt stupid, ashamed, angry at the exchange, at whales, at influencers, at the market. But beneath all of that noise was a quieter, more painful question. Why did I keep pushing until I blew up? Why didn't I have a plan to stop myself? If you've ever stared at your balance after a huge loss and felt that same numbness, you already know this story isn't really about Alex. It's about how this market takes normal people, amplifies their strengths, magnifies their weaknesses, and then decides, brutally, who gets to stay and who gets thrown out. So what actually happened to Alex, and to so many traders like him? It's easy to say he was greedy, or he was stupid, but that's lazy thinking. The truth is more uncomfortable. The system rewards exactly the behavior that destroys you later. First, let's talk about psychology. FOMO is not just a buzzword. It's a survival mechanism hijacked by charts. When Alex saw his friends posting gains and heard people saying, "This is the last cheap cycle," his brain tagged that as threat. If I don't act now, my future will be worse. Taking a reckless trade started to feel safer than doing nothing. Then greed stepped in, but not in the cartoonish way people imagine. It wasn't just, "I want a Lamborghini." It was quieter. If I made this in a week, imagine what I could do in a month. The first wins weren't a warning. They were gasoline on the fire of overconfidence. Most damaging of all was his refusal to accept loss. Cutting a trade at a small loss doesn't just hurt the account, it hurts the ego. Every time Alex refused to close a losing position, he wasn't protecting his capital. He was protecting his self-image as a smart trader. Until the market shattered that image for him. Now layer that mindset on top of a complete lack of structure. Alex never decided whether he was an investor or a trader. Was he trying to hold positions for months or scalp for minutes? He didn't know. He had no written rules for how much to risk per trade. Sometimes it was 5%, sometimes 50%, sometimes everything. His risk management was hope and prayer. He didn't track his trades in any meaningful way. No journal, no screenshots, no notes about why he entered or exited. Without data on himself, he could only remember the exciting wins and a few catastrophic losses. Everything in between blurred together into, "I'm probably good at this." He also didn't understand the product he was using. Futures are not just spot with leverage. They have funding, liquidation thresholds, margin requirements, cascading effects when large positions blow up. In a highly volatile asset like Bitcoin, which can still swing double-digit percentages in a short time, applying 20x, 50x, 100x leverage without a clear plan is less like investing and more like standing in a storm holding a metal rod. And then there's the environment he was trading in. Crypto in 2025 is louder than ever. New all-time highs, new corrections, constant headlines about hacks, scams, regulations, ETFs, and institutional moves. At the same time, short-form content feeds us a highlight reel of the most extreme wins, traders turning small accounts into life-changing money, influencers posting giant green P&L screenshots with inspirational quotes. It's almost impossible, in that environment, to remember that a huge portion of traders are losing. Most people who blow up their account don't post about it. They just disappear. Meanwhile, the exchanges and platforms keep growing. Billion-dollar hacks come and go. The market shrugs and moves on. Alex wasn't just fighting his own emotions. He was sitting in an echo chamber designed to amplify them. Every time he opened his phone, he saw reasons to take more trades, use more leverage, chase more moves. He rarely saw anyone calmly talk about maximum loss per trade, position sizing, or building a strategy slowly over time. So when you combine a brain wired for FOMO, an ego that hates being wrong, zero written rules, a product that can wipe you out in minutes, and an online culture that glorifies risk and hides the bodies, you don't get a surprising accident. You get the expected outcome. The market doesn't care how good your intentions are. It doesn't care that you really need this trade to work, so you can pay off debt or buy something for your family. It only cares about behavior. If your behavior is undisciplined, impulsive, and emotional, you will eventually pay for it. That's the real reason so many people blow up in crypto futures. Not because they're incapable of learning, but because everything, their wiring, the product, the content around them, pushes them to trade in the exact way that ensures they eventually lose big. And here's the most dangerous part. Until the big loss comes, it all feels like it's working. Up to this point, it might still sound like the problem is out there: greedy exchanges, manipulative whales, irresponsible influencers. And yes, all of that exists. But here's the uncomfortable angle almost nobody wants to hear. The market did exactly what it was supposed to do. It exposed who was prepared and who was not. Most traders talk as if they're victims of some grand conspiracy. The whales hunted my stop. The exchange liquidated me on purpose. News killed my perfect setup. But zoom out for a second. If your entire strategy can be destroyed by one sudden move, was it really a strategy or just a lucky streak waiting to be interrupted? Crypto didn't betray Alex. Crypto simply accelerated what was already inside him. His impatience, his need to prove himself quickly, his belief that more risk automatically equals more reward. The market just compressed those flaws into a shorter time frame, so the consequences arrived faster. Think about it this way. If you can't handle a $100 position without revenge trading, over-leveraging, and moving your liquidation closer just to feel in the game, why would the universe suddenly bless you with discipline when you trading $10,000 or $100,000? Money doesn't change your character. It amplifies whatever is already there. The narrative everyone sells is, find the right coin, the right indicator, the right secret strategy, and you're set. Here's the flip side. If you don't fix your process, no coin, indicator, or secret strategy can save you. You could catch a 10x, 20x, even 100x trade and still end up broke later, because what you didn't fix in your behavior will come back with a bigger vengeance when you playing with more money. There's another myth people repeat to make themselves feel better. I'm only playing with small money. Even if I lose, it doesn't matter. It does matter, not because of the dollar amount, but because of what you are training your brain to accept. Every time you disrespect small money, you rehearse a pattern. Impulsive decisions, no records, no rules, no reflection. That becomes your default operating system. And when, one day, you finally decide to get serious and put in a larger amount, you will unconsciously run the same script. Only now, the numbers hurt. So here's the counterintuitive idea. The goal of your first year in crypto futures should not be to get rich. It should be to not destroy yourself. To build habits that would still work if you had 10 times, 50 times, 100 times more capital. That means measuring success by questions almost nobody asks. Did I follow my plan today? Or did I improvise because I was bored? Did I respect my maximum risk per trade? Or did I move the line when it felt inconvenient? Did I add to a winner because the setup was still valid? Or because I was greedy? Did I stop trading when I was clearly emotional? This isn't dramatic. It's not sexy. It doesn't look good on a thumbnail. but it's the only path that actually scales. Blaming the market is easy. Blaming manipulation is easy. Saying this cycle is different is easy. What's hard is looking at your own behavior and admitting, I don't have a real framework. I don't have clear rules. I've been trying to brute force my way to a lifestyle with nothing but emotion and vibes. The good news is that once you accept this, the game changes. Because if the problem is only whales and exchanges, you're powerless. But if at least part of the problem is you, then you also become part of the solution. So the real question isn't, how do I beat the market? The real question is, how do I upgrade the way I show up in this market so I stop volunteering as free liquidity? In a world where you can't control volatility, hacks, regulations, or macro shocks, what exactly can you control? That's what we're going to break down next, in practical steps you can actually follow, even if you're starting with a small account and a long list of past mistakes. Because here, the quiet secret most long-term survivors share. They stopped trying to predict every move and started designing how they themselves would move, no matter what the market did. Let's turn all of this into something you can actually use. Think of this as a blueprint for trading crypto futures in a way that keeps you in the game long enough to learn, improve, and maybe one day thrive, instead of exploding after a few lucky wins. We'll keep it simple. 5 steps. You don't have to be perfect with them. You just have to be better than the version of you that blew up last time. Step 1. Take inventory of your real situation. Before you open another position, pause. How much of your total net worth is in crypto? How much of that is in volatile coins? And how much is sitting as stable collateral? Are you mixing rent money, debt, or money you emotionally cannot afford to lose into high leverage trades? Write it down, not in your head, on paper or in a note. List the coins you hold, whether they are long-term investments or trading positions, and why you bought them. If your answer is because someone on Twitter said it's bullish, that's not a reason, that's a red flag. Step 2. Decide your maximum risk before you think about reward. Choose a percentage of your total trading capital that you're willing to lose on a single trade. For many serious traders, that's 1 to 2%. Not 20%. Not, whatever happens if I get liquidated. That means your position size and your leverage must be calculated backwards from your stop loss, not forwards from your dream target. If you can lose more than that amount on a single trade, the position is too big. Shrink it. If the trade only makes sense with insane leverage, it's probably not a good trade for your current level. Step 3. Build a simple research and information filter. You don't need to read everything. You need a small set of reliable sources and a basic understanding of what you're actually trading. Learn the fundamentals of the coins you trade, how the futures contracts work on your chosen platform, and where the major risks are: funding spikes, low liquidity, sudden news events. Unfollow or mute accounts that constantly trigger FOMO. Instead of chasing every hot narrative, ask simple questions. Who benefits if I enter this trade late? Is the market already crowded here? What would have to happen for this trade to be wrong? Write your answers before you enter. If you can't explain the trade in 1 or 2 sentences, you aren't ready to place it. Step 4. Break the all-in or nothing habit. Stop treating every trade like a lottery ticket. Divide your capital into portions, a core that you almost never risk on leverage, and a smaller part reserved for experiments. Use futures to express specific ideas with defined risk, not to constantly gamble for a big score. For many people, this looks like focusing most of their effort on a few major pairs they understand, using modest leverage, letting the edge come from discipline and repetition, not from wild size. See each position as one bullet. You don't shoot all your ammunition at once because you feel excited. You choose your shots. Step 5. Review yourself more than you review the chart. Once a week, sit down and look at your trades from the past days. Not to torture yourself, but to study yourself. Which trades followed your rules? Which trades completely ignored them? When did you feel most emotional? After a big win or a big loss? Write short notes. I broke my rule here. I added size even though my plan didn't say so. I traded just because I was bored. This is how you slowly rewire your habits. The goal isn't to become a robot. The goal is to make your worst impulses less expensive over time. If this sounds slow and unglamorous, that's the point. Anyone can open a high-leverage long in a bull run. Very few people can survive the full cycle, especially in a world where volatility, hacks, and sudden narratives are not going away. You don't need to be a genius to do this. You just need to decide that staying solvent matters more than being entertained. Let us step away from numbers and charts for a moment and talk about something most trading courses barely touch: how this actually feels. Losing money hurts in a very specific way. It's not just the missing dollars, it's the story attached to them. Maybe that money was supposed to help your parents, pay off debt, support your partner, or give you a bit of freedom you've never had. When a liquidation wipes that out, you're not just looking at a red number. You're looking at a future that suddenly feels further away again. If you've ever hidden your true balance from the people you love, you know this feeling. You talked loudly when you were in profit, sent screenshots, joked about quitting your job soon. Then the market turned, and suddenly you couldn't bring yourself to say, "I lost most of it." So you went quiet. You changed the topic. You laughed it off if someone asked. On the inside, though, it wasn't funny at all. Crypto can be incredibly lonely. You can be in a room full of people and still feel like no one really understands the pressure of seeing your net worth swing wildly because of candles on a screen. Every decision is ultimately yours. When it goes wrong, there's no boss to blame, no colleague to point at, no system to hide behind. It's just you, the chart, and the consequences. And yet, this same market is where many people place their deepest hopes. Freedom from a job they hate, a chance to help their family, the ability to live in a different city, travel, or just not stress every time a bill arrives. That combination, huge dreams on one side, brutal volatility on the other, is why emotions run so high here. It's tempting to respond to this by becoming numb. Whatever, it's just money, I'll make it back. But every time you refuse to feel what a mistake really cost you, you also refuse to learn from it. You push the lesson away instead of integrating it. What if, instead of treating every loss as an embarrassment to hide, you treated it as part of a much bigger project, becoming the kind of person who can actually handle serious capital one day? Because that's the hidden gift of this market. Crypto doesn't just test your strategy. It tests your patience, your honesty, your discipline, your ability to say enough when every cell in your body is screaming one more trade. It reveals whether you're willing to do boring, consistent work in a world that rewards loud, flashy shortcuts. Maybe you've already blown up an account. Maybe more than one. Maybe you VE promised yourself never again and still found yourself opening another reckless trade at 2 a.m. That doesn't mean you're hopeless. It means you are human, reacting to a system built to trigger your weakest impulses. But being human doesn't mean being doomed. It means you have the ability to change, slowly, painfully, through the way you respond to what already happened. You can decide that the last big loss was tuition, not a death sentence. You can decide that from now on, you'll respect small money, track your decisions, and ask harder questions before pressing confirm. You are not just a screenshot of unrealized P&L. You are not the worst trade you ever took. You are someone learning how to handle risk in a world that makes that harder than ever. One day, looking back, the exact dollar amount you lost in that nightmare liquidation 1T be the most important part of the story. What will matter is what changed after it. Did you shut down, blame the world, and repeat the same pattern somewhere else, in another market, another gamble, another shortcut? Or did you let that pain push you into a different level of responsibility with your money, your time, and your future? The market will keep being wild. Bitcoin will still have violent swings. New narratives will come and go. Hackers and scammers will keep trying to separate people from their coins. None of that is under your control. But how you respond, how you prepare, how you design your own rules before you dive back into the chaos. That part is yours. So where does this leave you? Sitting in front of a screen in 2025 with a futures tab open and a mix of fear and hope in your chest? First, we have to be honest. Crypto futures are dangerous. You dealing with assets that can move more in a day than some stocks move in a year, amplified by leverage that can turn a small mistake into a catastrophic one. On top of that, there are risks you don't see on the chart. Platforms getting hacked, bad actors draining liquidity, sudden policy shifts flipping sentiment overnight. But danger alone doesn't mean you should run away forever. It means you need a different attitude when you walk into this arena. You don't need to be a superhero trader. You don't need to catch every move. You don't need to win back everything in one perfect setup. What you need is much simpler and much harder. A commitment to stay in the game without sacrificing your sanity, your relationships, or your entire savings. That starts with the basics we talked about. Knowing where you really stand financially. Defining exactly how much you're willing to lose on a single idea. Refusing to copy trades blindly. Treating every position as a small part of a long journey, not a lottery ticket. It also means measuring success differently. If you followed your rules and took a small, planned loss, that's not failure. That's rent paid for staying in this market long enough to grow. If you walked away when you felt emotional instead of forcing one more trade, that's progress. If you finally wrote down your plan instead of keeping it in your head, that's a real upgrade. If this video has helped you see crypto futures a little less like a magic money machine and a little more like a high-risk tool that demands respect, then it's already done its job. Maybe there's one specific thing you know you need to change. Lowering your leverage, shrinking your position size, journaling your trades, or stopping the habit of entering setups just because you're bored. Pick that one thing and commit to it after this video. And if you're sitting there thinking, I have a story like Alex, or worse, I want you to share it. Not for drama, not for clicks, but because when people speak honestly about their wins and losses, everyone becomes a little harder to fool, including themselves. If you found value here, take a second to drop a comment with your experience or your biggest lesson so far in crypto. Then, when you're ready, check out more videos on the channel. Think of it as building your own curriculum, one video at a time, instead of gambling for shortcuts. In the description of this channel, you'll find links to exchanges and tools I actually use. If you decide to open an account or move your trading there, use those links, pick up any bonus they offer. And then remember everything we talked about today. Understand the product, respect the risk, and never treat leverage like a toy. This is not about becoming fearless. It's about becoming responsible. About being just a little more disciplined, a little more patient, a little more honest with yourself than you were last month. And if you're wondering what to watch next, stay tuned. In an upcoming video, we're going to dig into one of the biggest disasters in recent crypto history and break down, step by step, how the setup was built, how the trap was sprung, and what you can learn from it before you enter your next trade. For now, breathe, close the chart for a moment if you need to, and remember, your goal is not to win every battle. Your goal is to still be here for the war.